We're back. We're back to start with this week's podcast, and I am so happy to have one of my dearest friends in the business on the call with me. And everything that we've just been talking about was not being recorded, probably for a good reason. And so now, Bob, we are live. Everybody meet Bob Damigella with Marcus and Millichap Financial Services. And Bob, it's always good to see you. You're one of those guys who gets better looking as they get older. Me, I have to tell everybody I'm 72 to get compliments, and you just get it naturally.
Yeah, I always say, Charlie, I can't wait till tomorrow. You know why?
Why?
I get better looking every day.
I have to tell people that I'm 6'2" of rock solid man muscle and incredibly good looking. And the reason why I say that is because I wouldn't hear it from anybody else. So
exactly.
That's why I say it. Yeah.
No, man, I'm going to give a shameless plug, by the way, because unintentional. I did not know you were sponsored by Multifamily Lawyers.
Yeah, crowdfunding lawyers. Nate Dodson, Rich Robinette.
They're my lawyers.
Okay, let me tell you something. These guys,
they're great.
Yeah, they are.
Great.
They are. I mean, I had a great conversation with Nate the other day. He's actually putting together the work for all of our cohort business. And these are the guys, folks. If you're listening, and tell them I sent you. Tell them I sent you. Yeah.
Yeah,
that's awesome. I did not know that you were with Nate and Richard. Richard, he spoke at a couple of my events, and he's got just such a dry, deadpan humor, and it's just perfect. I absolutely love it. Exactly. I absolutely love it. So, that's cool. That's so cool. So, hey, all right. First off, why don't you tell people exactly what you do on your day job? Then we're going to get into your
my night job.
Really, what we're really here to talk about.
Okay. Yeah. No. Thank you very much, Charlie. Look, as you know, like yourself, I've been around finance and real estate forever. Over 30 years, I financed about $3 billion in debt and equity in my career. And my day job, as I head up capital markets for Marcus and Millichap in New England. And effectively, to summarize it, I did in the last several years about $265 million debt and equity placements, mostly debt. And I head up capital. So all I do is finance commercial real estate properties all day, every day. And a good number of those, including my own properties, are multifamily investment properties.
Yeah. And folks, let me tell you something. Bob, is one of us. Actually, he's had me take a look at a couple of his properties for our insurance brokerage firm, which, Bob, I'm just telling you right now, your current market is the right market for your property right now.
Right.
When it's up for renewal, I'm gonna pull out all the stops and get your business, save you some money. So,
Charlie, I know you. You're an above board guy, and every deal I get, you're happy to take a swing at. And right, you take the deal. That's
exactly. I appreciate it. Yeah. Okay, now, folks, I've known Bob for the longest time. I remember
now.
I know. I remember when he walked into the Boston RIA when I was speaking, and we connected then, and we've been friends ever since. And Bob, Bob has an amazing expertise in helping investors, navigate the waters of the financing side of the business. And, I don't know if it was his watching my success or just figuring it out as an entrepreneur on his own. But Bob has created a great program. I'm here to promote his services through his program, where he teaches new investors, people looking to get started, how to navigate the debt and the equity side. And for those, listen, that Bob, and I don't mean this in a disparaging way, there are always some people on the call listening that don't even understand the difference between debt or equity, or understand what it is or what it means. And the term capital stack. Boy, scares the day. I know. Yeah, exactly. Yeah. So, and you make that all easy to understand and talk and to get these people where they need to be. Tell us more exactly how you do it.
Yeah. Thank you, Charlie. Yeah. It's amazing, because having been around this business for forever, I've met a lot of people really wealthy. Okay. And, it's, that made me realize that, I'm missing the boat here personally. In fact, when you and I met, and you know this from firsthand experience without going into too much detail, that was me coming off the tail of the '09 crash in the subprime market. I was running a hedge fund, $100 million hedge fund that invested in whole loan mortgages, pre-securitization. And when that blew up, along with Lehman Brothers, Merrill Lynch, everything, I found myself living on credit cards with 2 teenage girls at home as a single dad. It was not a good place to be. Okay.
Yeah. You don't want to teach your girls how to live off credit cards.
No, they already know anyway, but that's enough. They're in their 19 and 21 now, so they're experts. Believe me, I get the bills. But to not to go too long about this, but all I had in order to get my net worth back on track, because I lost millions in my fund when it wiped out with the rest of the subprime market, was my wits, a couple of good friends that stood up and helped me out. You know, one of them. And
was that me, Bob?
I don't know. I can't say any names. You might get too many calls for help. So, you know who your friends are. And then I have my wits and my skill set in how to finance multifamily properties. So, the great Grant Cardone, obviously. All right. And Grant says there are 3 basic steps in sequence to doing a deal that are the primary steps. Number 1 is find a deal. Okay. Number 2 is in this order, and he's correct. Find the debt, and then the equity. The equity after the debt. Okay. And what it meant to me, okay, and why I've launched Finance Insider to help people learn how to actually finance a deal from front to back. What that meant to me, that 3-step process is, it doesn't take any skill set to do step 1 to find deals. Yes, it's not easy, but if you've got a good personality, you take some brokers to lunch, you start looking at deals, you build a group of brokers that'll show you deals. You don't need to have a skill set, okay?
Okay, can I stop you right there? And I'm in total agreement with you, because all these other, real estate gurus are out there teaching you multifamily is the best thing in the world, and this is how you find the deals. Okay, you can throw a brick at one of these things and knock down 2 of these gurus who all they do is show you how to find the deal.
Find deals.
Okay, that's the easy part.
Right. You have an email and a phone, you can find deals.
Exactly. And you don't even need an email, because back in the day before email, that's how deals were still getting done.
Exactly. So that took me to step 2 and 3, and the realization in my mind, because every deal ends up as a discussion about the finance, is that you need skills, experience, knowledge to finance a deal, to source the debt and to source the equity and to structure the capital stack and to do the deal properly, to understand how to analyze, underwrite, structure, deal with lenders, deal with brokers. All those things are required as a skill set. And that's where people, I think, really miss out and maybe fall off the wagon in terms of their ability to be able to be successful. Okay. So I launched Finance Insider, and honestly, but inspiration from you. You've killed it in this space. And I realized that I was wasting my talents, unlike yourself, with the knowledge as an attorney and so forth, to really be able to use your talents to help others. I realized, look, I'm in the last decade of my career. And in that last decade, I want to share with as many investors as I can the knowledge that I have. I have a very active business. I just told you I did $265 million in debt and equity placements in the last several years. I literally do over 10% of what Marcus and Millichap does in terms of number of deals in the Northeast. Okay. So I make a living, but how can I help folks? And I can help folks by teaching them how, from front to back, how to analyze, underwrite, structure, deal with lenders, deal with the whole syndicate, the whole 9 yards. And I'll leave it at this and let you pick it up from there, is that my course is not an underwriting course. Okay. Because honestly, I've been doing this a long time. Underwriting is important, but it ain't that hard. And once you get the skill down, this whole thing is not about underwriting. It's understanding when you get a deal in your hands, what do I do? What type of a lender do I choose? How do I structure this? How do I want to structure a syndication? Who gets what cash flows? And it's much more different. Underwriting, not the biggest deal in the world. So
Okay, Bob. No, let me. Oh, I feel so badly, but folks, I mean, Bob and I know how to put the whole package together, and so we look at these guys, who are out there as like they're capital raisers and they're looking to fund of funds and all that stuff, and they're just brokers. They're just putting their hand out for a couple things. It's the people who can put the whole entire package together from soup to nuts that are the ones who are going to build the business of the multifamily real estate investing and own the millions. I love these guys, Bob. When I said, so what do you do within the partnership? Well, I head up the underwriting. Okay, so when that half hour is done, then what do you do?
Yeah.
Like, come on, that's the easiest thing. I mean,
Exactly.
it's you can have a VA in the Philippines doing it for you.
Exactly.
It's really just a formula. You fill the formula and you know how to work the formula, and then you move on to the next step. And that's the thing that Bob and I are talking about. Is there are many next steps.
Charlie, just off that point, the first deal that I did coming out of my meltdown from the subprime crisis, okay?
Are we talking, the deal that you closed, that you own, or one for someone else?
Well, I'm talking about my own deal. The first time, my wits and skills to build my own net worth to come out of this meltdown.
Yeah.
The very first deal I did, I created $1 million in net worth out of thin air.
Okay, let's talk about this because this is a great story. People will really appreciate it. Is this the Rhode Island deal that we're working on together a little bit?
That is 24 units in North Providence, Rhode Island. That was the very first deal out of the gate that I that I did on my own and with no money of my own, and managed to out of thin air create $1 million in net worth.
Bob, let's paint the backstory here. Let's because this is such a rags to riches, good for you that anybody on this call can, they just had the chutzpah, the panache that you do, they could have done the same thing. Because folks, remember what Bob was saying before, where he came out of that 08-09 crash, probably in the same position I was, okay? And we got our ass handed to us.
We did.
And Bob's going through a divorce. He's got the girls. He's got, living on credit cards. He comes to his friend Charlie. Charlie, can you help me out? Yep, Bob, I'm here for you. Whatever you need, I'll take care of it for you. I mean, that's where, because we both were, I got back a little bit faster than Bob did. But Bob went off. And so Bob went off and knew, just, give me a phone and an email and I'll rebuild it all.
That's right.
And so you get in with Marcus and Millichap, right? You got in there, you did your old dog and pony, like, I'm going to kick ass, I'm going to make the best thing in New York. And you absolutely have.
Yes.
You got to be one of the tops in their business, for the capital side. And tell us what happened. This deal, because you're sitting right down there with a bunch of brokers.
Right.
And is that where this deal came from one of those guys?
And again, I don't want to say that's an unfair advantage because I don't want people on the call to think, hey, just because he's sitting in there. But I would be not telling the truth if I didn't tell you that it did come from within in the shop. Yeah. But it doesn't matter. I speak to brokers outside of Marcus and Millichap every day that show me other deals that I work on and do. Okay. But in terms of this deal, I literally took this deal from front to back. I sourced it internally. I underwrote it, raised the debt, raised the equity with my invest, structured with the attorneys that you were suggesting before, structured the syndication, closed the deal, and now have the deal still in my portfolio and manage it to this day and created well over $1 million in net worth myself.
Okay, so let's see. But okay, that's right. You didn't nothing out of your pocket to do it.
No.
Yeah. Okay, but you tell me about how you raised so obviously the debt, you're putting the debt together, and that's part of your program is to teach people how to talk terms with the debt. Yes. But tell everybody in the call how you source the equity, because remember, you're coming out of a divorce. You just got your ass handed. You don't have any more friends and family. They're not even talking to you anymore because they like the old wife. They didn't even like you. And we say, here you are again. That's not true. I know that's not true. But you went off and How much money did you need to raise, and how'd you do it?
Okay, those are all great questions. I needed about $1 million. Okay, yeah, but I paid 3.5 for the deal, and it's now worth 5.5. I paid 3.5. I raised a little over $1 million, and it wasn't that big of a raise, and I did it myself. Okay, but it's interesting how this all comes about. But first of all, to one of your points, I follow you. By the way, I follow you because there's so much great information to share. Is that you talk about syndicators and that how it can be a scam. Many of them are out there just to scoop up your structuring fee and leave the rest to the winds. Okay.
Yep.
That's I'm a professional. You're a professional. That's not how I work. And if anybody on this call, their intention is because there is a hefty structuring fee in any deal that you do if you do it right. But if you're on this call to just capture structuring fees, you're going in the wrong direction. If you really want to build net worth, if you really want to build a portfolio for yourself that can create a legacy and may change your life, that's what we're here to talk about. Because I did capture a structuring fee. I run Finance Insider, so I'm telling you as an insider how it works. And yes, I captured a structuring fee. And that structuring fee ultimately ended up being my piece. It's an A-B share structure. I don't want to complicate it. The B shares are the GP, which is me, and the A shares are the investors. I captured a structuring fee, and that fee I didn't run off with it. I stuck it into the A shares, and I capture a pref return of 6% on that money, plus I own the GP. If you understand structure, which you learned in my program, you'll know how to do this, okay? Now, it's structured, basically that $1 million for round numbers is structured, the whole deal is structured, in an 80-20 split. So the investors get 80% of the returns, and the GP gets 20. Now, it pays a 6 pref, okay? So it's a 6 pref with an 80-20 split. Pref is a preferred return. It's income. It pays every month, and it's up to a 10% high water mark. At 10%, the split changes from 80-20 to 60-40. A little less for the GPs, the LPs, limited partners, and a little more for the GP for doing all the work. And they've already got 10% on their money anyway. So anything over that is a little bit lower split. But the projected returns, because all this is number one, it doesn't start with what I need. It starts with what the investors need. It's a 2.5 times equity multiple. It's a 18-21% IRR projected on the deal, and tax benefits because any good syndicator knows how to do a cost segregation so that their returns come back to them on a tax not deferred, but a tax sheltered basis on if you have getting income. All those things happened in that deal. And the ultimate outcome is I have super happy investors. Another tip, Charlie, for anybody on this call who wants to syndicate, I teach this in my course. I had for $1 million, I could have called you and you could have given me $1 million like that. I had plenty of investors that said, Bob, I'll give you $1 million. I'll take the whole piece. But I didn't. I took the time, I made the calls, and I got probably about 12 to 15 investors, 50, 100. Now, why? Why, Charlie? Because
now you've got 12 happy customers.
15 people to go to for the next deal as I scale up.
I love it. Okay? I love it.
So, I love it. Yeah. So this is what I do, and this is how you do it. This is abbreviated, but this is what we do. So it's very exciting.
Okay. Let me just, folks, Bob and I did not plan this conversation. I did not know what he was going to say. He does not know what situations I'm going through. But I got to share with you, Bob, a conversation I had with a client of mine who we're doing a deal with, and her panicked text message to me this morning about how, we're Thursday today on our group call, we're going to share the elements of the deal and what type of returns we can expect on it. And she's like, well, how are we going to structure the deal? How are we going to do this? And what I said, the only information you can give out at this meeting is what the potential returns will be on the project. Then we have individual conversations with individual investors to find out what they're looking for in a deal. And then we start to structure the deal around those needs. And that's exactly, and Bob, you just said it, and you just explained it beautifully. I'm doing it, and
Right.
I don't think people understand. I mean, so your course teaches investors, like, this is how you do it. Her concern, and then she comes back at the end. She's, okay, that's what I needed to hear. I had no idea how these deals are set up. This is her first one, and she's all in a tizzy. And of course, I'm like, relax. I got you. Okay, this is how it's done.
Right.
But nobody teaches you that.
Nobody's teaching this. This is what doing is actually very unique. There are some folks out there that want to give you updates on the markets and things like that, and where rates are, and how can I finance your deal. But their goal is to get you to work with them to finance your deals. That's kind of why they're teaching this stuff. Yeah. That's completely separate from where I'm at. I want to help people learn how to get rich on their own and learn how to finance deals, because I have a saying at the end of every one of my posts on Instagram. My Instagram, by the way, is Robert Damigella, if you want to find me.
Damigella. Robert Damigella.
Damigella. And at the end of every one of my posts, my statement is, it's all in the numbers.
Yeah, it's all about the numbers.
Because it's all in the numbers, Charlie. Yeah, we all know location is the most important thing. But if you find a good location, then it's all in the numbers.
Yeah.
Right? So
I just realized when I said Robert Damigella, I thought this just reminded me of a Family Guy episode of Robert Loggia. As in Robert Loggia. Look over there, Robert Loggia. So that's what I'm going to remember you from now on. Hey, first up, let me talk. I got notes. I've been taking notes here.
Okay.
Stuff. Let's talk about the preferred 6% preferred prep, the prep, right. because we went through that. Right. Sure. I got to take a little swig myself.
My nose is a little.
We're talking about the preferred prep. By the way, Bob, did you know that this was a 2023 podcast of the year for American Apartment Owners Association?
Oh, look at you!
I should wear it around my neck. I got the top real estate book for 2023 too.
Top of your head.
Yeah, pretty cool. Yeah, on his shoulder, like a little epaulette. It's a little epaulette. We just went through the heyday, and obviously we're going to talk a little bit about what's going on in the market now, what we can expect. Interest rates are high. A lot of multifamily investors who are stupid, who had never been through a crash before, didn't see this one, and they're losing their shirts. But before that, the talk prep was, the pref. You got to give an 8% or 9% preferred return, and I'm looking like, you can't do a value add deal and give a 9% preferred return. So what? Why are you doing 6? How'd you come up with the 6 number while everybody else is doing 8 and 9 down in Texas and where supposedly nothing ends?
That's such a brilliant, to the core, to the bone of exactly how to do a deal. All right. And if you don't understand that, you don't understand it. What we're about to talk about. Okay. First of all, this is what I teach, obviously. Okay. And that's how to understand how to do this. It touches on everything from how do you choose the right lender for your deal? Like, what's the right lender for this deal? Is it a value add deal? Is it not a value add deal? Roll into that. Is this my first deal? Do I need to attract? It's going to be harder to attract people to my first deal, so a prep would make sense. Whereas if you've done 20 deals or 10 deals, you may not need a prep. Or the deal may all be back end anyway. There are deals that you want to rip the cash flow out of, depending on how they cash flow, versus capture all your returns in the back end. And that's all in the analyzing deal, which is part of what we teach, of course. But to drill it down to how I got to a 6, you were talking before, and one of the things that's important to add to making these determinations on splits. I mean, first of all, the splits and how you split up a deal is only driven by market. Like what's attractive in the market, right? I mean, you can't give LP investors, a 20% carry in the deal. You keep 80 as S&P. That's not going to fly. You'll never raise a dime. Okay. But all the splits are really malleable and can be chosen like I did my 10% and then 60/40 and blah, blah, blah. But you have to look at the free cash flow after debt service to see what you have available to distribute as a pref return. So this deal cash flowed so well that I had enough room to be able to pay a 6 pref to investors. Now, you might have a deal, like you said, it's a value add deal, and you need to go in there, do some work, get the rents up. In fact, I have a live deal in my program where I actually have a deal which is a vacant building, no tenants in it, but I'm able to do the deal because I know where the rents are going, but all the returns are coming on the end. There will be no pref on that deal.
Exactly.
Okay. So it just,
Hey, Bob, if you told me there was a pref, I'd think you're a liar. I think, yeah, that's baloney. How can you do that?
you can't do it. But
No.
this deal cash flow so well. I think the debt service cover when I bought it was about a 130 or 135.
What? With no tenants?
No.
Talking about Rhode Island. Okay, I'm sorry. Yeah.
I'm going back to Rhode Island. Yeah.
Okay.
The one with no tenants was vacant, but I knew where the rents were when it was leased. They had owned it since the 80s. It's an A+ location on West Newton Street, by the way, South End.
Got it.
Right.
And he didn't call me on this one. I should end the call right now. I should just fire you as a friend.
I didn't get the deal.
Oh, okay.
Okay. So anyway, but if I bought it, and once I did a couple $100,000 in value add work, the rents from where they previously were would have more than doubled. More than doubled because it was now an on-market deal with someone. I had an old owner who didn't care. He'd owned it since the 80s. Clean it up, rent it up, double the rent, and my value. The purchase price was about 3.2, structured for investors. The returns would have been well over 20% IRR, and I would have doubled the rents, and it would have been worth, as soon as I re-rented it, about $5 to $5.5 million in the south end of Boston.
Quick question for you, Bob. How quickly after you had done all of that, all that turn work, would you have refinanced it and pulled money out?
You know this, Charlie. I thank you for throwing me a softball, but you know the answer. It certainly would have depended upon the kind of debt that I used, what the prepays were, how much flexibility I had in actually moving that money.
But Bob, if I had taken your course, would I have asked all those right questions before I decided on the type of debt to put on that property because of the strategy on that owning that property?
Yeah, you'd know what kind of debt to use, and frankly, that was bridge debt, interest only, that would be likely replaced within 12 to 24 months.
Yeah. And that's your capital event, and that's when you pull the money out, and that's actually what we're looking.
Yeah,
that's what we're looking to do on this hotel that we're about to acquire. Yeah.
Well, I just, as an aside, and I know we're on this call, but I just financed a Marriott out in Springfield, $24 million.
That's not the casino, is it?
No. It's right near walking distance to the casino. It's the Marriott in downtown Springfield. I financed that deal just in the last year.
Yeah, 24 million. Good for you, man. Good for you. I don't need that much for this hotel, but it's a nice hotel. We're going to convert it. It should double in price is what our strategy is. Bob, one of the things that we joked about before, and I'll make kind of another joke about it, is the term capital stack. And they throw it around. And let me give you another term. Let me give you another term that I realize is in the same vein as capital stack, and that is arbitrage. Because what we're doing with the hotels, we're taking advantage of cap rate arbitrage.
Right.
We go from a 14 cap down to a 6 cap. And it's just millions. We make millions. And then I thought, you know what arbitrage is to an Italian? Bob, you should know this. It's the VIG. It's the VIG. What's the VIG? What's the profit? What's the difference? No, that's all arbitrage is. And capital stack is like, where's the money coming from? What's this? What's a capital stack?
How much is in?
We've been all wigged out about that.
Yeah, exactly. No, but they're important fundamentals to know how to run a capital stack because, a more highly leveraged deal is a higher risk deal, but it's also a higher return deal. A lower leverage deal is lower return in your equity, but lower risk in general, right? The
Yeah.
equity is the equity, as you know, is first loss position. So the more equity you put in, the more you have at risk to lose if the property declines substantially in value. But look, I have and anybody can text me. I'll tell you at the end. I have an ebook called Capstack Fundamentals that I can get out to them. And
why don't you make sure that you get me the link for it? I'll put it in the show notes so anybody can just click on it and get your book.
Yeah, that'd be great. I'll do that for you. And Capstack Fundamentals talks about exactly that: the equity, the mezz, and the first position debt, how it's structured, how to manage that capital stack to optimize a deal and to manage risk in the whole portfolio. And it's not really spoken about. Kudos to you, because folks don't really focus on that fundamental very often, but it's actually really fundamental to what we do every day. How are we gonna structure this deal and make it actually work? Cash flow, underwrite, debt service cover, the whole 9 yards. And if the cap stack's wrong, it's not going to work. And you need to know how you move that around.
Bob, bravo, man, bravo, because I totally get it, and I don't have any part of my training that focuses on this.
Right.
I mean, I could teach it. It's like water off the back for me. But But the thing is that you put it together as a finance guy, and you weave you tell, because all of the building of the capital stack is just answering questions. Okay, then we go this way, and then we go this way. Answer this question, then we go this way, and it's just figuring it out. Okay, what kind of deal is it? Okay, is that permanent debt? Is that a bridge loan? Is that it's I love the way that you're teaching this. This is absolutely fantastic. Well, what's the name of your program? How can people sign up to get it? You have webinars that you teach. Like, how can we get a hold of this information?
It's great, Charlie. Thank you so much. And I think first of all, if anybody's interested, let's say, in the ebook, which also has a list of vernacular terms for the industry in it, along with capital stack, you can text 617-356-0421. Again, that's 617-356-0421. And just text the word finance.
356-0421.
Yeah. And just text the word finance, and then we'll get back to you, the Capstack Fundamentals.
Awesome.
Okay. A little bit about what we have, Charlie, to answer your question. Right now I have a class tonight, for example. It's a 10-module, 6-week course that I teach front to back. The 7th week is a bonus course, a bonus class, where I tie it all together. But we start at the beginning, actually speaking about class 1, Capstack Fundamentals, class 1.
Awesome.
Class 2 tonight. 3, not 1, not 2, but 3 lenders on live. Number 1, community bank, $20 billion. What do we look for in a deal? What do you need to know? How does your deal make sense for us? Number 2, agency lender. What do we look for in a deal? How do you get on our platform? How do you borrow money from Fannie and Freddie? Number 3, bridge lender, private lending. How you have a value add deal? How are we going to lend to you? What's the deal going to look like? What are our rates look like? All that stuff. Answers, questions, back and forth. That's just the second class. 3 live lenders. And then from there, we go on to everything from underwriting deals, analyzing deals, syndication, how to structure a syndication, how to get your deal. And then I actually, Charlie, go into showing everybody, what does a term sheet look like? What is a commitment? I actually pull up, I use the Rhode Island deal as a perfect example, the actual documents to close that deal, the term sheet from the lender, everything. So you see it for the first time. You talk to lenders. You see how the deal works. You see how you raise the equity and the debt. It's a complete soup to nuts. So that's the 6-week program. I also have a digitized, which it can be bought as a, video program. You can see it on your room. Also, we launch next week is our finance club. Our finance club is phenomenal because that's going to allow you to come to me and say, okay, I've been underwriting. I underwrote this deal. I want you to look at the underwriting. How does it look? I can't seem to get it to debt service cover. Why is it? I think it's worth, $5 million, but I have a cap rate of, 10 on it. That doesn't make sense, or whatever the case is. And we're going to actually have expert-led sessions, and I'm going to make available to everybody who becomes a member of the club things like my expert leading the session. We're going to have other people on it. It's a Zoom call. We can all share deals, discuss networking. Guess what else I'm going to do, Charlie, which no one else is doing?
Go ahead.
If you are a member of my finance club, you bring a deal. The goal is to get you up and running and get you going in a deal, okay? We do live, then we do tape. You get the tape version, then we get you the club, and now get you live, right? Get you going, underwriting deals and getting LOIs out, LOI templates, okay? Everything. So, but what I'm also, because I head up capital markets here in New England, which we're a national firm, so we can finance anywhere. It doesn't matter. But I work locally. I will help you source your debt and equity for your deal.
Wow. Very nice.
That's all I do every day.
Very nice.
And,
wow.
And yes, so it's the missing link in multifamily investing. And I think, if anybody on the call would like to really improve their skills, because Charlie, as well as I do, there's a lot of opportunity coming in the next 12 to 24 months. And you're going to be up against some really sharp people.
Yeah.
And if you don't have your skills down, if you don't have the vernacular down, if you can't look at the deal, I'll show you a way to shortcut underwrite a deal in about 3 minutes. So you'll know whether it makes enough sense to even waste any more time on that.
Yeah.
Instead of pining over a deal and the numbers, do they make sense? Do they not make sense? Nope. Here you go. 3 minutes. Boom, boom, boom. Give me your average rent. Give me your number of units. Give me your cap rate, and I'll tell you what the deal's worth. How's that?
Awesome. Well, here, grab my power cord now this time. All right, Bob, what's the website we go to?
The website, remember, we're a new course, Charles.
Okay.
Go multifamilyfinanceinsider.com. It may or may not be live yet. If it is, it is. If it isn't, it isn't. We've only been up and running since the last 4 months. We have had an onslaught of people that want the course, want the digital program. We've got already 25 people signed up for the finance club. We're going as fast as we can. But you can reach us at that number. You can text us. We can get you information on our digital program, on our live program, on our finance club, whatever you need. And I have a gentleman on my team named Nelson, very smart guy. He's been doing it in finance and real estate for decades as well. He can help anybody that calls in or reaches out. You can call that number too and speak to Nelson. You want to learn more. I wish I had more to offer at this point in terms of technology and websites, but it is what it is.
So, folks, you must know I really like this guy because he's been on my podcast longer now than anybody else by this additional 20 minutes. But this has been absolute fun, Bob. It's always good to see you, man. And let's keep talking. You and I. We meet he's like one of those guys that I meet for lunch like once a quarter. We don't talk at all between the time, but when we sit down, it's just like old home day. We just laughing our asses off at each other. So exactly. It's awesome. Bob, I'm so happy for you, man. You're such a great success story. I think it's fantastic. I know I'm going to have a nice little dinner with you and the new bride, and that'll be a lot of fun as well. So
and we're gonna I'm gonna be launching my own podcast, so I'm gonna quid pro quo. You'll be on mine. Okay.
Absolutely, yeah, that'll be fun. That'll be fun. I'll show you how to do it, Bob. I'll show you how to do it because, of course, I don't know if you know this. I don't know. I don't know. Have you won any awards for your podcast?
No, I haven't.
I'm so good to see you. Thanks for being on the show. You and I will talk soon.
I appreciate it. Be well. Thanks, Charlie.
Hey.
Bye-bye to your guests, too. Bye-bye.